first of all, you saw that 2020 was a slightly better year for the economies, and in particular in France, including at the end of the year, the industry being able to maintain a good level of activity. At the beginning of this year, I would say we still expect a progressive recovering of the economy with the vaccine taking place step by step. Probably a first half with more uncertainty, but then an improvement of in the second half.
The fixed income and currencies trading revenue was down 16% here, and yet we've seen a lot of other banks deliver a surprising upside on these trading metrics. Why are you not doing better in this space? Is it geographic? Is it scale related? Is it execution related? Help us understand how you can improve this line.
Yeah, but perhaps first, the main takeaways of the fourth quarter is a profit on the fourth quarter, and we have confirmed the rebound of our activities, all our businesses, including the capital market activities, which are in a kind of transition following, if you remember, the first half, which was, of course, impacted by the dislocations of the market. The good news is that we have stabilized the revenues for the capital market activities at 1 billion. And overall, the second main takeaway is, of course, the quality of the credit portfolio, which has not deteriorated. It's, of course, something very important, and we've been able to provision 1.4 billion for the future potential losses. And the third takeaway is a very high Tier 1 ratio, which is allowing us to effectively resume dividend with a lot of comfort. So really on the investment banking side and the fixed income, we are again in this overall division in the transition. Beginning of the year is very encouraging, and what I expect is in the coming months again to have a progressive further normalization of the revenues.
Good morning, Frédéric. There's been a lot of M&A activity in the banking sector last year. We saw that in Spain and in Italy, and it's expected to carry on in 2021, even potentially on the cross-border front. Given that you have the lowest price-to-book ratio of any major European bank, are you a potential target?
Listen, what has taken place and what might still take place is domestic consolidation between banks which are small or mid-size and with relatively small balance sheets. When you talk about potential cross-border, it's a very different issue. It's a much more complex one when you talk about large balance sheets. The rules are very different. And I think it's not at all the priority currently, given the uncertainty on the economic front, given the still uncertainty on the regulatory front, and certainly for us, the priority, and I think we will show that 2021 will be a year of rebound for Société Générale. The priority is, of course, to manage the crisis, accompany our clients, and of course show that effectively, following the second half, which has shown a pretty strong and resilient profit, we can deliver the same kind of performance in 2021.
You've made lower provisions than expected in the fourth quarter. We know that ECB is worried of a wave of bad loans and defaults once government support packages are withdrawn gradually. Is that a scenario that you are concerned about?
No, not at all. What we've seen in the fourth quarter is actually, defaults, the cost of risk related to default, which is lower than in the third quarter. And our NPL ratio has not increased. So the quality of the portfolio is really confirmed, and we decided to have a prudent provisioning in the fourth quarter. More than half of the cost of risk is actually for good credit. So we enter 2021 with, as I said, a 1.4 billion cushion, which is a very significant amount, and we confirm that our expectation is a lower cost of risk for 2021 compared with 2020.